Welcome everyone to Vested Interest. This is Shane back again with another stock pick of the day video. Today we are going to take a look at one out of the healthcare sector, Viatris I think it's called. It is February 28th. Let's jump right in the video. And if you have not done so, or you are new to the channel, or would just like to help me out, if you would hit the thumbs up button down below, that really does help out. Hit that subscribe button, join us on this journey to financial freedom, join the Vested Interest community, and hit that notification bell so you're notified whenever we put out any new content. Doing that really does help out a small YouTube channel like me with the YouTube algorithm and helps to spread the word. We are trying to get to 1,000 subscribers, and I'm only going to get there with your help. So really do appreciate everyone who's taking the time to do that. Now, this is the Vested Interest Stock Screener. This is how I set up the videos. It's also how I look at stocks on a high level to see if I'm interested in investing. You can pause this and see how we're going to run through the video. I do this every day when the market's open, Monday through Thursday. It is my screener, right? I'm in my mid-40s, 40, 44, going to be 45 this year. So I probably have a different investing strategy, timeline for retirement, that sort of thing. So make sure you are setting up your investment criteria based on your timeline, your investing strategy, not just blindly copying some guy on YouTube that you don't know. Now, I don't have a degree in finance or some guru or anything. I'm not saying I'm the expert. This is just the criteria that I use. Don't blindly copy anyone. And if you really want financial advice, you should probably go find a financial advisor. I am not a financial advisor, and I'm certainly not your financial advisor. But this is how I run through the videos, so you can take a look at this and borrow whatever you need to. Just don't blindly copy it and use it for your own. Now, back to Viatris. If you want to know more about this company, check them out at www.viatris.com. That's www.viatris.com. That is where I pulled this information from. That is their homepage. In November 2020, Viatris was formed through a combination of Mylan and Upjohn with a mission of empowering people worldwide to live healthier at every stage of life. And this is a spinoff from Pfizer. I think Upjohn was the spinoff portion, and then they merged with this Mylan. Again, so healthcare company similar to Pfizer. They spun off a lot of the brands that were kind of at the end of their life. And if you don't know anything about the brands, basically a brand has a certain amount of time where other companies can't copy it. They have copyrights for them, right? So other companies can't do that. And then after a while, they open it up and they have other drug companies that can make the same product, put a different name on it. Generic drugs, you might have heard the term generic drugs, right? So it would be a Lipitor, but not use the name Lipitor, right? A Norvac, but not use the name Norvasc. And here are some of the brands underneath their brand, right? Viagra, probably sure everyone's aware of that. Influvac, Performist, like I said, Lipitor is probably another one most people know. Celebrex, I think I've heard. Zoloft, I've heard of that one as well. Xanax, definitely heard of Xanax. So you're probably aware of some of their brands. Definitely Viagra, I would say everyone's aware of. And Lipitor seem to be the biggest one. So a spinoff, they haven't been around for very long, since 2020. So very short shelf life on this one. Let's keep on going. Now, the reason we're taking a look at them, down 7.11%, huge drop in the day. We are talking about Viatris Inc, ticker VTRS, out of the healthcare sector. Close out the day at $12.29, and you can see a lot of volatility, but overall, it looks like they tried to come back in the morning, but overall, just a sell-off throughout the day. 52-week range as low as $8.74. That's probably a better place to be buying them at. As high as $13.62. They are closer to their 52-week high than their 52-week low. Average volume 9.7 million. Today's was 26. Just people were dumping this one, right? Everyone's selling out of this one. Might have been an earnings call, something along this. We'll see here in a minute, possibly. Market cap of 14.744 billion, small cap one here, right here. Beta of 1.12, so they are more volatile than the overall market, and you can see that volatility throughout the day. If I was to go to a 5-day, 3-month, 6-month chart, you probably see just as much volatility. More volatile than the overall market. PE, price to earnings ratio, is low at $8.14 per share. EPS decent at $1.51 per share, especially for such a low cost, $12.29 and $1.51 in earnings that you're paying. So not bad there. Earnings date February 28th. Yep, that's what I thought. So they had an earnings date today. I'm assuming they missed either their top or bottom lines. Maybe their projected forecast over the next year was lowered or wasn't looking good to begin with. For dividend yield, very well, no, not that bad. 3.63%, 48 cents. I was going to say low, but 48 cents isn't necessarily low because the cost per share is pretty low. 3.63% dividend yield, that's pretty respectable. Ex-dividend date was November 22nd. Looks like they paid out December 15th. Now, I'm going to go into statistics. If you were to go to Yahoo Finance, where I pulled this information from, over here on the left, you'd find, statistics, financials, a lot of information, stuff on their options. Click on statistics. We're going to take a look at dividend yield theory to see if this one is potentially presenting any undervaluation. To do that, we go down to dividends and splits. We look at their 5-year dividend yield average, 0.89%. We compare it to its current 3.63%. Over here, 3.63%, same number. And since it is higher, according to dividend yield theory, this speaks to some undervaluation on this one, right? Now, again, this has only been around for a few years, so this might not be, not even 5 years, only 2020, so this might not be a great metric to use. Low payout ratio, 31.79%, so lots of room to increase this dividend over time, but I don't know, because they don't have quite a 5-year average, I don't know that I'd trust this one really as much as I would some other companies. Now, same thing, if you were to go over here on the left and you go down to financials, you're going to find a lot of good information there. You're going to find the balance sheet, the income statement, debt to equity ratios. Is their revenue growing over time? What do their margins look like? Are they paying down debt? A lot of good information in that particular column. We're going to look at free cash flow, because free cash flow is what they use to pay dividends, pay down debt, reinvest into the company, make acquisitions, right? And if you typically have growing free cash flow, you have growing dividends over time. 2020, they were at $550 million. 2021 up to $2.5 billion. 2022 looks like they're holding pretty steady at $2.5 billion. And so far, for the 2023 numbers have not ended. I'm sure they did right here. So we'll have to see exactly what they closed out 2023 at. But I'm assuming that was part of these earnings date here. This just may not have been updated quite yet. Now, repayment of debt, obviously, whenever they spun them off, you'd have to see how much debt they spun off with this company. But they are aggressively paying down debt so long as they haven't. And that's another thing you can see under the financials. Right above repayment of debt, you'd see issuance of debt. So long as they are paying down their debt faster than they're issuing debt, that's a good sign. You can see that repayment of debt right here. They are not rebuying any shares, at least not yet. That is pretty typical of a company that spin off. So I always recommend more than one source. Another one that I like is stockanalysis.com. You pick any sources that you like. Just make sure that you are picking more than one so you can check the information you're getting is accurate and up to date. Now, this was last updated November 22nd, 2023, so it's a few months old now. I like to show you that as well, and that shows that these sites are not updating, daily or weekly. This is a few months since they've touched this one, so that's why you want more than one source. Now, they do have 3 stock analysts that have taken a look at this. They call it a consensus sell. And I think one had them in it. When I looked at this, if you were to go to this site, stockanalysis.com, you could click on each one of these. Strong sell, hold, buy, strong buy. They're calling it a sell. And I believe it was 1 in the hold of the 3 and 2 were in the sell. So going back at least to November 22nd, they were saying sell, and I don't know that I disagree with them right now where it's sitting close to its 52-week high, and the numbers don't look all that great to me, but we'll keep running through and you'll see that. They have a low estimate of $9. That would be a 26.8% decrease from where it currently sits. Average estimate of $10.33, that would be a 15.98% decrease from where it currently sits. And even if it was to hit their high, which is lower than where it currently sits, that would be a 10.53% decrease. So overall, these 3 analysts think get out of this one. You're overpaying for it. Don't buy it right now, right? So again, maybe closer back to this $9 is where you want it. I don't know enough about this company and how their brands and how their sales of those brands are doing. You would want to look at that as well. But this does not, overall, the metrics don't really scream buy to me. Now, I like to get into the statistics here and look at return on equity or return on invested capital to see how well a company is spending its capital back on itself. And I like 10% or better. Well, the return on equity here, 0.27%. That's terrible. Return on invested capital, 0.07%. That's really bad. Does not meet the 10% I'm looking for. Now, EPS growth does look good. I like 5% or better. They're sitting at 14.09%, though I don't like that their revenue forecasted growth is negative 1.02%. Now, let's take a look at their dividend. They are a quarterly payer, right? They pay out on the March, June, September, December timeframe like most companies do. No dividend growth to speak of. They haven't grown their dividend in the last couple of years. They've only been around for since 2020, so not good to see that they're not growing their dividend. Looks like they did the first year or second year, but they haven't since. Low payout ratio again, 31.79%. So a lot of room to grow that dividend if they want to in the future. Going back to 2021, they were paying 11 cents. They raised it up February 22 to 12 cents, and that's where it's been ever since. So they have not raised the dividend since February 22. I'll give you my honest opinion on this one. I would not be interested in this. I am in Pfizer right now. I am down in Pfizer. If anything, I would just continue to buy Pfizer. This one's metrics don't look all that great to me, and I agree. This would be a sell for me if I was holding it now. And if you were interested, maybe, the $8-9 mark is where you look at an entry. I don't know. I have not done a discounted cash flow analysis. If anyone owns this, drop me a comment down below and let me know what you think of it. And as always, appreciate you stopping by. If you haven't done it already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors so we can share our experiences, share stocks like this that we're maybe watching or buying. And, just the good and the bad along with dividend growth investing. Now, I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Viatris that you'd like me to do a stock pick of the day video on, go ahead and drop it in the comment section down below, and I'll work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk, gains money, and should never invest in any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice counselor or certified financial advisor.